Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. A lot of red on the board in the grain sector this morning, and we kind of started off mixed over in the cattle, hogs to the plus side, but now we're seeing a lot of red start to creep back in there as well. Scott, I want to talk about the corn market first of all. Not that we weren't on some pretty shaky footing in the first place, July getting below the $6 mark here in the overnight session, but now we get some China cancellations of corn, and that's just adding to the pressure here, isn't it?
That's right. Thanks for having me, and quickly get below the $6 mark. Like it's a little, let's test this $6. We just smashed it. So it's been a market held on by old crop news, the demand of the old crop, the bull spreads. And then when that story starts to dry up or get on shaky ground, it doesn't know what to stand on. I mean, it's always been, we're thinking we're going to have a big crop coming behind us. This is just two different stories to the market. And if the bullish news in the front loses its footing, then the easy path is lower because we don't have any new news to add to the market as far as our growing season is concerned. And we're a good month and a half away from starting to digest what it's going to look like for our crop before we even start to think about it. And yeah, when China cancels for the second time here, some corn purchases and starts to look elsewhere, looking to South America, the market reacted pretty fast. So you hear that on the corn, the soybeans, South America, everybody's banking on them having a large crop and looking for them, and beans as well. Sounds, the rumors that we're going to be pulling some beans up to North America here from South America. So that's shaky news to try to digest for the old crop. And with no new story to add to it, the easy path is lower. You kind of thought it was maybe going to find a little bit of a trading range, I guess, in my opinion. I thought that's what might happen here before we start to look at what our crop's doing, but hard for it to swallow this news. And I suppose, China cancels once and sees the market go lower, do it again, same results. So that seems to be working well for them.
Do you think we'll see more China cancellations, and will that effectively put a fork in the old crop story, do you think?
Well, that's the wild card of the market, is what's China going to do? And not one person has the answer to that. So it feels like it's working for them. Sometimes they'll come back in and buy them the next week, buying some back cheaper. They just pay their penalty to get out of some of the pre-purchases they had. But when the market breaks enough and that penalty is worth less than what the break in the market was, it's easy for them to cancel. So if we see further break in the market, it might be easier for them just to pay that penalty and cancel some more. So the faster we break, maybe the more likely that's going to happen. If it starts to hold and firm, maybe they can rebuy or relook for some of their purchases. But as of now, it doesn't feel like they want to jump back in. It's heading in their direction. So I don't know if I'm ready to stick a fork in it yet. We're still going to have that regional imbalance to deal with. But a little scary when we do start talking about sticking a fork in it.
And we've seen funds liquidating. They weren't necessarily very long in the corn market, but new contract lows over in the wheat, certainly not helping the corn. And let's talk about soybeans as well, though, here. July below the $14 level here at some point, do you think? Or is that $14 level going to hold there? And how about $12.50 on the November beans?
To me, I'm not ready to say that any of these grains are quite ready to hold yet. I still think the beans can continue to flush, test some of these levels. There's still going to be some long liquidation, some pressure. As fast as we broke this market, you're going to see some margin calls and some decision making to be had, and you start to add a little bit more nerves into the market, and that's what creates taking out some support levels and get scared out of the market. So still feel like there's a little pressure there. We've been overpriced comparative to world prices. So we're still trying to figure out where that is. Where are we back into the market? As I alluded to earlier, pulling some of these soybeans to the United States from Brazil. Maybe we're priced a little bit too high. Still trying to find that correction here yet. So to me, still feels like we're going to test some of these support levels and probably break them to the downside.
You bet. That Brazil competition you mentioned, part of the reason. You look at the weekly exports this morning, we're starting to actually fall behind on soybean exports. We were already behind on corn. But the other question I have for you on soybeans is soybean meal is hitting some 4.5-month lows. That has been what's held this market up for so long here. With that rolling over, how concerned are you?
Yeah, when you start to lose some of those firm staples, the soybean meal had such a good run there and staying at some pretty high levels. And you look at 420 and it's still, quite a ways off the highs, but we're still at a pretty decent level. So I'm a little bit worried that there's still some risk to the downside on the soybean meal. And that's just going to add to the weakness. If that continues to pull back and dry up a little bit, it's going to weigh on the beans to the lower side. So I think the easy path right now is lower for some of these markets until we can find some real strong demand to stand on, in my opinion.
Right. And even with lower corn prices this morning, we are seeing the cattle market start to turn a little bit more red. Let's talk about the cattle market, because yesterday it felt like we held up really well in the face of a lot of pretty negative news here.
That's right. I think they traded better than I expected yesterday. From being one of the long-term bulls in this market and continuing to share the fundamentals of why we think this market needs to go higher. Even some of us bulls have been thinking there's a little bit of a break coming in the swift cash rally over the 3-week period for the spring rally, that maybe some of that was going to start to get a little bit softer. But so we threw some negative news at the market yesterday with Fort Morgan having some broiler problems and going to be down for the latest rumor I heard was for 10 days. It's going to be maybe a good time for that to happen. As numbers are tight, they're easily going to be able to shift these cattle around and probably not get backed up, because you're hearing cash prices all over the board. But we were able to trade stronger. We had a flush yesterday on the Fort Morgan news, able to come back and trade higher on the day. And it's just been led by the feeders. The feeder board's been relentless in continuing to just push this market higher. Did hear yesterday that some of these cash feeder prices have maybe saw their first softening, and it's definitely not a softer market, but did hear that there's a little bit of a break that has happened, guys pumping the brakes just a little bit.
So what are you thinking here about cash trade? Like you said, we've had, a pretty wide disparity in terms of where the prices have come in. Where's the majority right now? And what do you think we're going to see for the volume for this week? And, we're hearing of maybe packers being short bought, but will they pay up?
That's the question right there. They've been cherry picking at this point, and you hear all over the board prices. You see some little bit of 172 in the south, and then you start to hear of some 180 in the north, and there's a line of northern people that would probably take 180 that missed the last rally, and then all of a sudden bids are back to 175, and then the next phone call you get, I did get some 180, and then but it's not up in the road. I think it's that if you've got some really nice, clean black cattle, they're going to want them. They just are trying to keep the reins in on this cash market and trying to get their leverage back, because it got away from them last time. So they've got the limited purchases. We're only going to buy so many. I mean, that's what they say out of one side of their mouth. But then suddenly, I found an opening on Tuesday of next week. I could probably take those nice blacks off your hands, and get them in at this price. But for everybody else, we're only bidding 175. So you're seeing quite a mixed bag. Some 285 meat trade that did happen. That seems to be where the dress trade wants to settle in at, which is not a horrible price. We're going to be looking at this calf crop, which is not quite ready yet. So usually this time of year, you're able to sort a little bit harder. The winter we went through, it feels like we're a little bit further behind yet. So I think the Packers still going to have a window where they'd like some cattle, but they're just trying to keep this cash in. And these calves, they're going to be willing sellers. They're going to be some green ink and some profits in those calves. So they're going to want to sort. They're going to want some of these prices. So that's probably going to keep a lid on this cash. Sometimes in May, you'll have that 1 week where the Packer will make one little push, one more push hard for cash, and then it can dry up after that. So just still feeling like we're maybe topped out. We had our top for the spring, and we have to regroup.
Yeah, and cash is really the key here. Choice boxes over 309 yesterday, so certainly that is not a negative for the market. All right, hogs, let's end there. Marketing year high on exports this morning. We had the nice pop yesterday. We got June above the $90 mark. The big question is, are funds ready to blow out of these shorts?
That is the big question. Is you get a $3 rally and the funds all the way down. Everybody's wondering, where's their line? When are they going to start to get out? And yesterday's $3 up, you thought, here he goes. This might be when they unwind some of these shorts that they have. Some of them are tied to cattle hog spreads. Some of them are just straight shorts.
True.
And then you had an increase in the open interest with the big up yesterday. So you're really leaving yourself scratching your head, wondering what really happened there. It's one day in a row rally for the hogs. And it's been that, can we continue to get a 2-day rally? Can we get a 3-day rally? Can we add to it? So we got above the $90 level. Many were talking about funds. That's going to be the line.
Right.
We'll be able to react from here. And I think the hogs, if you were looking to enter that market on the long side, I would want a little bit of confidence before I start to jump into that market. So I'm not completely trustworthy yet. We're hearing a mixed bag in the country. You've got some empty barns around, but yet isoines are priced at dirt cheap to free, somewhere in that range. So,
right.
And some of them not coming down from Canada because they're not ready to take that price. So quite an arm wrestling battle. Packers slowed their kill down, but now suddenly they're out looking for some hogs again. So I'm a little bit confused on the fundamentals, but that's probably pretty normal for the hogs.
Oh, yeah. And we're seeing just a little bit of red right now, but I'm not going to rule out that we could end higher. It's just kind of a mixed bag. All right. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek, and that's Markets Now.